Okay, so here we go. Live, and live. Okay, so what can we do here? Can I drop this one down here? No, I can't drop that one down there. I'm going to leave that one right there so I can see it. Good evening there, Mr. Michael. Ooh, Snuggle Bunny, Jelly, Chucky, Monchisco, Maximus, Jeep Guy, Joe, David, Joe, Kingfish, Walgreens looks up. Okay, well, let's take a look at Walgreens. First and foremost, John, what's happening? And let's get ready to go. Are you guys ready? Denise, good evening in Arizona. So here we go. We got a new camera today, and it's going to be recording for my podcast. Finally got my podcast thing up and ready to go. Good evening, ladies and gentlemen. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a safe, predictable, consistent 1% per week, using nothing but pre-qualified dividend stocks, and those are companies that have consistently increased their dividends to their shareholders for more than 2 decades. That's 20 years. So I'm looking for a safe, predictable, consistent 1% per week. Now, I'm asking you kindly, please only ask your question once. I will get to every single question before the night is through. Okay? So we're starting right around 9. And we're ending up around 11:30. So if you have any questions, be more than happy. How do you take profits from Robinhood? Cash. Ooh, that's an interesting question. Robinhood is a little challenging. Are you using the mobile app or are you using the online version? I find the online version to be a little bit more complicated because the app on the phone, it's like if it says green and you're up, you just press the button and you say sell at a profit or buy. However, it depends on what strategy you're using. Always, always, always. What strategy are you using? Okay. Pink, how are you doing today? Yeah, Pink, let's behave ourselves. They're different. Yes, they are very much different. The mobile app is a lot different than the online version. Okay, we got some people over here on Facebook. Cool beans. How are you guys doing? All right, let's get ready. Let's get started. What do we have first? First, somebody wanted to take a look at Walgreens. Well, let's take a look at Walgreens first and foremost. All right, Walgreens up over here. WBA, and here we go. WBA first. Whoa. Walgreens had a downturn today. Hold on a second. Elaborate, please. Well, what do you mean? The difference between the mobile app and the online version? Elaborate? The online version is more complicated. I don't know how you want me to elaborate that. Because the mobile app right there in your hand, it's right there. Everything is simple and easy. Pink, how you doing? Behave yourself. All right, so somebody want to take a look at Walgreens. As I'm looking at the chart, here's the high right here. Move this thing out of my way. Got cords all over the place. Anyway, I'm still getting my trading, my broadcast room set up because I can't sit. Because, you have the opportunity to either sit during a podcast or to walk around. I get too fidgety, get too much energy. You got 400 of Walgreens, Kingfisher. Now, Kingfisher, what did you jump in Walgreens at? I mean, it was definitely a no this week. Runaway escape, cool beans. What's up with this chat? Blur, I have no idea. Okay, it's a simple chat. You ask a question, I give you an answer. Topic of conversation, dividend investing for weekly cash flow. Okay, that's the topic of conversation. So Walgreens, now, Kingfish, why would you buy Walgreens? It's the time to sell, not to buy. Am I Tony Hawk? Yeah, I'm Tony Hawk with a lot more gray hair. No, I was talking about Pink saying, Daddy, yeah. Okay, how about Johnson & Johnson? We're going to take a look at Johnson & Johnson and Morgan Stanley in a minute. Hold those questions. All right, but back to Kingfish, why are you jumping in to Walgreens? Walgreens already had its move. Let's zoom into the last 30 days. Okay. Wow. I really got to move this thing over, don't I? Hold on, I got to get this thing fit right. Okay, what am I looking at? Looking right there. That's what I want right there. Okay. So, the last 30 days, Walgreens, take a look. 30, right here. Let's go to 30 days. The 20th, right there. Okay, so Kingfisher, the last 30 days for Walgreens, take a look. 30 days ago, we're right at $9.50. We bottomed out right about here on the 2nd of January. Then from there, shot up nicely. You should have jumped out of this thing on Friday. Look at this. Anytime last week, jump out. So I'm not quite sure why you would hold on to it. If you jumped in at 1242, why the hell would you jump in at 1242? Look at the jump. You already missed it. I've got a question over here. Oh, yeah, stocks went up after the presidential inauguration. Yeah, well, did what it did. Is what it is. I didn't even see it, so I have no idea. I have no idea what went on. All right. That being said, let's move on to the next one. So the next... Blur, tell you. Okay. All right, let's keep on going. Vulcan Materials, VMC. I never heard of it. Now, see, it always boggles my mind. What is it? VMC? VMC. All right. No. Sweet Jones, what's up? So let's take a quick look at VNC and why I'm saying no. Now, when I say I want a simple, safe, predictable, consistent 1% per week, the only way, who am I speaking to specifically? Chap Stevens. Okay? Okay, Chap Stevens, VMC. When I say safe, predictable, consistent 1% per week, I don't know what it is you're thinking. But for me, I'm thinking a weekly optionable stock, which means I can trade the option every single week. Okay? Now, with a monthly, this is a monthly optionable stock. February, March, May, August, December, those are all months, not weeks. A weekly optionable stock would look something to this effect right here. 24 January, that's this Friday. 31 January, that's next Friday. Thoughts on Roblox? Sorry, George. No. Never heard of it. It's going to be a no even if I do it. 7 February, 14 February, 21 February. That's a weekly. Every single week I can trade this. Every single week I can bring in cash flow. With VMC, the only way I'm going to make weekly cash flow on it is to sit in front of my computer, look for certain setups. No, that's not what I want to do. When I say, this is James, welcome to Dividend Stock Talk, brought to you by the 10-minute trader. I only want to sit in front of my computer for 10 minutes. That's it. You missed my comment, Sweet Jones. What's happening over there, Sweet Jones? Missed my comment. The other channel is not showing the TV screen. Uh-oh. Thank you for that. Well, let's take a gander, and why is it not? Let's get this out of the way. Display capture. Let's get rid of that. Yes. And let's add another display capture. Display capture. There we go. Come on. Well, no, this is interesting. This is not my area of expertise. I can hear it. I just can't see it.
That's what I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that will help you get the best return on your money. List number 1 is stocks that are paying out each year, and then list number 2 is a list of stocks that pay out twice a year. List number 3 is a list of stocks that pay out every month. And the 4th list is lists of stocks that pay out every quarter, which is OTC. Yeah.
Okay.
The list I'm going to send you is going to help you get the best return on your money. Wait, I just realized something. If there are 20 days exactly in this year of...
This is fun. Let me figure this damn thing out.
Trading days, and if you only have to own a stock for about 2 or 3 days, how many times can you buy? 4 times!
Yeah, she's funny.
There's a different company paying out dividends.
Okay, hold on. I'm trying to figure this thing out. This is not my expertise. This is...
One company per month. Just one. January, February, March, that's 12. 12. You can buy 12 different companies the whole year and still make over 20% a year. That is easy. One trade a month. Who can't do one trade a month? But, let's do 2 trades a month. 20 days in the month of January, you can do 2. 1 every 10 days. Okay, so you get 2 January, 2 February, 2 March, blah, 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 24 for the whole year.
This one. Why is this one showing? Okay, that's not what I want to see. And why is this one right there?
That's cool. Anyway, this is James.
Okay, that was working. Alright, so... Don't want to see that. Don't want to see that, don't want to see that, don't want to see that. What the hell am I doing wrong here? Flying fuck. Okay. Display the settings. Okay, that's still not doing it. Damn it! Well, this is not good because I'm trying to figure out how the hell this damn thing works. Alright, what am I looking at? Yeah, the display. Why isn't the display displaying what the hell I want? No, that's not what I want. Fuck. This is definitely not my thing. All right. So we're just going to deal without YouTube for tonight. Yeah, but fine, fuck. All right. Technical difficulties. All right. Anyway, let's get back to what we're talking about. I'm just going to have to deal with that another day. So, here we go. You're doing fine. Thanks, Michael. I'll have to figure it out later. Okay, so Walgreens, no. Not this time. Now, don't get me wrong. I like Walgreens. I actually own some Walgreens, and I should be getting rid of my Walgreens this week. We got a little bit of minor issues. We'll figure it out. Not a big deal. Johnson & Johnson. Johnson & Johnson. Hold on. Wow, I missed all these questions. Okay, here we go. Johnson & Johnson. Now, Johnson & Johnson, don't get me wrong, it's a great company. It is. It's been around for a long time. But if you don't mind not getting 1% every single week. See, my goal is 1% every single week. Now, I can't get that with Johnson & Johnson because look at the premiums. Right now, let's change this. Change this to single. And let's take a look. Here's the high, Johnson & Johnson. The high of the year is 168.91. Okay, the high is 168.91. Why is that so far up? And the low was just a couple of weeks ago. All right. Look at the movement. From the high back in October, she shoots all the way down to the bottom right there, the last 30 days. Okay, take a look at your last 30 days. 30 days ago, we're at 144. Jumps up, pulls back, jumps up, pulls back. Here's your bottom right here in the 141 area. Then she shoots up here to 148. Now, granted, it's not a big, huge move, but look at the numbers. At 148 right now, what am I collecting? Well, the 148 right here, I'm collecting, let's move this over a little bit more so we can see it better. Okay. 148.96. Well, I'm going to be looking at the 149s because the closest one here is the 149. And it's going from 136 to 145, just below 1%. So if you really like Johnson & Johnson, well, great. I managed to scroll back here. All right, Blur, how you doing? Thanks for joining. Have any questions? Shoot them out. I will get to every single question. Let's move on to the next one. You jumped in on January 16th. Yeah, I get that. Walgreens, back to Walgreens again, because he jumped in on the 16th. Not quite sure. Are you shitting me? You jumped in on the 16th. Am I looking at it right? All right, so Kingfisher Wood. Answer me the question, because it boggles my mind when people do this. What are we asking questions about? Blur, we're asking questions about investing in dividend stocks for a weekly cash flow. 1% a week comes to over 50% per year. Okay? Now, Kingfisher Wood, why the hell would you jump in on the 16th? This makes no sense to me whatsoever. Your bottom is way down here. It went up, it pulled back, and it shot up like this. Okay, I don't ever try to tell people what to do. Seriously, I don't. But it makes no sense to me. When is the last time you've ever heard anybody say, hey, it's at a high, let's buy it and wait for it to go higher? No. When you're at a high, that's when you're selling, not buying. I have no idea why you would jump in on the 16th. Because the 17th, you went up just a tiny bit more, and then she pulled back. Well, yeah. Well, look. Here's your bottom here. Okay, $8. And it jumps up to 13. From 8 to 13, I realize it's only a $5 move. But a $5 move on an $8 stock is more than 50%. If the stock jumps up from the low, jumps up 50%, why the hell are you jumping in here? That's the place where you start to jump out and take your profits. Oh, but what do I know? Anyway. I wouldn't have done it. Okay, sorry. Walgreens could go into bankruptcy. No, Walgreens is not going into bankruptcy. It could. Well, so couldn't Ford. So couldn't Tesla. So couldn't IBM. Any company can go into bankruptcy. Are they going to? Huge difference. Right now, there's 8,700 Walgreens worldwide. You don't claim bankruptcy on 8,700 stores. You don't. You figure out how to make it work. Well, Walgreens figured out a couple of months ago, you know what? The previous administration, the current administration, totally different story. The previous administration, the Democrats, yeah, I'm calling all the Democrats, they didn't want to prosecute theft. So Walgreens, Kohl's, Macy's, CVS, a whole bunch of the small stores all over the place, they got decimated because of theft. Because people walking in the store, $900 are left, perfectly okay for you to steal and walk out. That was the previous administration. They didn't want to prosecute anything under $900. So yeah, people are going to walk in, steal a bunch of shit and walk out. So that's what happened. So what's the issue? Well, the issue is now, after seeing all that red, losing a lot of money, they decided to get rid of 25% of the stores. Okay, that kind of makes sense. But you got to take a look at their game plan. What is their game plan? They have a pretty decent game plan. But you got to do your research. Never buy something you don't understand. If you think Walgreens is going to go to bankrupt, well, don't buy it. Okay, before you quick to judge, take a deeper look. Now, Walgreens at the moment, this big jump right here, that's mainly because a private equity group is coming in and talking about buying it out and taking it private and restructuring. Well, that's a great opportunity. Why? Well, you take a look at the numbers. But here's the best number you should probably be taking a look at. Let's go right here. Let's go right here. Let's put in WBA, which is Walgreens. WBA. Okay. Now, okay, here's Walgreens right here. Okay. This is Walgreens right behind me. What I'm going to do, come over to the left-hand side, way over here, and I'm going to look at statistics, and I'm going to find you the book value on Walgreens. Now, you might be asking, what is the book value? Well, the book value, basically, the book value is basically if you liquidate everything and then you sold it for what it's worth. It's $12.09. It was higher than that last week. Oh, well, the book value is $12. That doesn't make sense. All right. Well, anyway, the purchase price $11.31. The book value is $12. Okay, it's a lot better than. Let's take a look at. Give me a second. NVDA. Okay, look at this. NVIDIA, $140 a share. Book value, $1.74. So if this company, NVIDIA, is only worth $1.74 per share and it's selling at $140 per share, well, Walgreens has a book value of $12 per share and it's selling for $11.30 per share. I don't know. Did you read the numbers? Are you understanding what it is you're looking at? Also, NVIDIA has a 1 penny dividend. Well, Walgreens dividend's a hell of a lot better than that. Yeah, Andrea, I'm going to agree with you. But, okay, I got butchered today with Hess. Bought 150, now it's at 148. That's not butchered, honey. That's just a slight cut. Let's take a look at Hess. Holy shit. Who did that one? Angel One. Angel One, are you shitting me? Seriously, dude? Take a look at this number. Okay, a year ago, we're at 135. Okay, jumps up to 165. That's the high of the year. From there, she drops all the way down to 120. Back up, back down. Here's your bottom right here. 128. Shoots up like this. Let's zoom in, take a look at the last 30 days, and then I really, 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 really need you to explain to me. Okay? 30 days ago, this thing's at 126. It jumps up to 152. And you bought it at 150? Angel, what the hell are you thinking? Look at what makes you think that this thing is going to continue going up just because you bought it? Okay, a 126, 152. That's a $26 increase. A $26 increase on 126, because it was 126 right here. And it jumps up 26 bucks. That is almost a 20% increase. And you buy it up here. What the hell are you thinking? Seriously. Okay, if you coming trying not to get insulted or not getting your feelings hurt, anything, don't do stupid shit. In my humble opinion, this is a time to sell, not a time to buy. But I don't try to tell anyone anything. You can do whatever you want. And you did. You bought it at 150 and it pulled back, and you say, wait a second, what the hell's going on? Well, you shouldn't have bought it at an all-time high or a 30-day high. Okay, you're buying it here. Where did you expect it to go? 30 days. That's 4 weeks. Up, 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 up. And then you think it's going to continue going up and nobody's going to take profits? Why are you investing in the first place? You're investing to make a profit. Well, you bought it here expecting it to go higher. I never, ever, ever, ever heard somebody said, oh, look, it's at a high of the 30-day period. Let's buy it and watch it go higher. No such thing as higher. Okay? It's a 30-day high. That's when you sell. Never buy. Okay, never mind. Never mind. I can't help you out there, Angel. I don't know why the hell you would buy at 150 after that big, huge run-up. Okay? What stock is this, Angel? Hess. All right. What about Morgan and Stanley? MS. Morgan Stanley. Okay, that's another no. Quick, not even bother looking at it. Look. Last 30 days. Yeah. No, thank you. Jumped in on the 16th. I got that one. Walgreens, yep, got that one. Got that one. Lindarella, how are you today? Anthony, can you take a look at Pfizer tomorrow and accept a premium but snipe dividend 10 shares at Tesla? Oh, hell no. I don't do Tesla. Thank you for the support. Angel, dude, seriously, you've been here long enough. This is not your first week here. Okay? Seriously, dude, it's not your first time here. If you're seriously interested in earning money, never have I ever heard somebody say, it's at a high, let's buy and wait for it to go higher. No. You make money by buying low and selling high. Boat Project, how much do I make with 50,000 account doing covered calls, selling puts? You can make 1 to 2% every single week. Now, 1% every single week is about 50% per year. If you don't get 5 or 10 minutes every single day, now that's less than an hour a week. So ask yourself, 50 grand, an hour a week for 50%. That's $25,000 or $500 an hour. Think about it. 10 minutes a day, 5 days a week, give you a little bit of slip time. That's 50 minutes. Fix your YouTube, really enjoy seeing a chart. Yeah, okay, see, here's the issue with that. Now, I just got some new hardware. I don't quite know how to use it, and my tech guy is doing a live stream in the other room. So it's like, how the hell do I fix it? And I always tell him, make sure it's set up before you do anything. So we're going to have to just deal, okay, today. Just deal with it today. We're actually doing a podcast also. So now I have 7 cameras running. So I got a lot of shit going on all at once. And this new piece of software that I had so I can see 3 screens at once, yeah, it's a little glitch. I'm old. I don't know how to figure it out. So I need someone else to come in here and set it up for me. So let me get back to what I'm saying. If you're going to make money in the stock market, more than likely buy low, sell high. Never buy something you don't understand. If you're buying here, why the hell? Because you should be buying down here. You're older than me? Hey, us old guys got to hang together. All right, let's go. What do we have here? Sup, Jimbo? Really? My Aunt Mary was the only one who ever called me that. Lockheed Martin. Lockheed Martin, LMT. LMT. I don't know. Okay, so I'm a huge supporter of buying low, selling high. 30 days ago, we're at 490. She drops, here's your bottom. She shoots up. Friday is challenge. Okay? And then today, she shoots up. Why? Why would you buy today? Again, you buy down here. Wait for the profits. Once it gets down low enough, then you do it. Come on, guys. There's 9,845 companies. Why does everybody want to buy at the high? That makes no sense to me whatsoever. That's the time you should be selling. Grab your profits, move to the next company. Did you ever get into Nike with me after we talked about it last week? No, I did not. The numbers didn't look quite right. Okay, so Ian Sendrak. Let's take a look at Nike. NKE. Okay, yeah, that's why I didn't get into Nike last week. Okay? Your high's here. Look at the drop. Here's your bottom right here. Okay, 2 days ago was the bottom. Yesterday was higher, today's higher. Tomorrow is a good time to jump into Nike if you like everything else. Well, let's take a look. Let's jump back for a second. Go all the way back a year. So a year ago, Nike's at 101. Tops out with a double high at 107 back in the middle of February. Then from there she drops, goes sideways a bit. Just around the Olympics, it drops like a rock. It goes from 94 all the way down to 75. That's a big drop. Okay? The last 90 days, here we are. Look, high, low, where was it? Where is it? Look at the direction. Down, up, down. Now she's going back up again. This is the time to jump in. Okay? For those of you who like to buy at a high, no, this is where you buy. Now, it doesn't look that glamorous, but look at here. Okay? Look, zoom in a little bit closer. Okay, here's your last 30 days. Your 30-day high, 30-day low, 2 days to the upside. Now, you got to decide. You got to decide, where do you think the bottom is? Is the bottom here with 1 day to the upside, 2 days to the upside, 3 days to the upside? You've got to figure it out, because it's really not that difficult to figure out a high once time has passed. Well, it's right there. It's really that simple to see. So let's go. Okay, same thing here. Where's the high? Right there. Where's the low? Right there. Well, how can you tell it's a low? Can we look at We'll look at Caterpillar in a second. Hold on. The low is here. Well, it's easy because you got plenty of things on the left and plenty of things on the right to look at. But how do you tell? Oops. How do you tell if that is the low? Because 2 seconds ago, you said it was the low. Okay? Let's move 1 day forward, and I'll show you exactly what I mean. See? 1 day forward, 1 day up. See? Look. There's the bottom, 1 day to the high side. Is that telling me that this is the bottom? Well, for me, I like 2 days. 2 days in a row, that isolates this as the bottom, because this just could be just an anomaly. You know, a little bit of profit taking, jump in, jump back out again really quick. Angel, you really like those expensive stocks. Okay, so that's just 1 day. So let's look at one more. Next day, 2 days to the upside. Well, that is definitely 2 days to the upside. That is definitely the bottom. Okay, what do you do next? DoorDash buying price 108, hold or sell. Silverman, terribly sorry, dude. I only do companies that have 2 decades of consistent profits. Okay, there's 9,834 companies. What do you think is so good about DoorDash that actually show me that they're consistently profitable? Okay, you're just seeing if you can make some money. I get it. Okay, what are you looking for? Are you looking for capital appreciation, where the stock goes straight up? Or are you looking for cash flow? Because there's a huge difference. 2 totally different outcomes. You're buying a stock. You want cash flow or do you want capital appreciation? 2 totally different mindsets. I'm looking for cash flow. I'm 60 years old. I'm retired. The money that I have has to be able to last me. Cash flow for now. Well, stop buying stupid shit. Never buy at a high. Why? It boggles my mind. Yeah, it is funny if you think about it. All right, so anyway, Nike, the reason why I didn't get into Nike last week, okay, this is last week right here, dropping. Okay, I wait for the bottom. Well, the bottom's right there. 2 days to the upside. Friday, today. Simple. Friday, today. Well, great. If she opens up 73.17 or higher tomorrow, perfect opportunity to jump in if the numbers are right. Well, currently 73.55, I'll be looking for the 74s. The 74s are only looking for 32. That's a 0.5%. No, but hold up. How to identify a high, a low? Explain. Sherman, are you shitting me? Seriously, are you shitting me? The high? That's it. The low? That's it. How do you explain the high and the low? I can get a 4-year-old, my grandson, 4 years old. Hey, little buddy, where's the high? Oh, it's right there, Papa. Hey, little buddy, where's the low? It's right there. What do you mean? How do you distinguish between the high and the low? It's simple. The higher one is the high. The lower one is the low. On a 1-year chart, dude, seriously, on a 1-year chart? Simple. You ready? Here we go. There's the high. Here's the low. Okay, 1-year chart, 1 year. A year ago, today. There's the high, here's the low. Go to the 90-day chart. 90 days, high, low. It's not that difficult. Adults, no, I was answering Sherman's question. Alrighty, let's move on. Okay, so that's Nike. I didn't get into Nike last week because the numbers didn't look right. Okay, last week it was dropping. Friday was the 30-day bottom. Now, I didn't know Friday was a 30-day bottom, or Thursday, because there was no support there. But Friday was a little higher, and today was higher. So definitely, there's the bottom right there. This is the opportunity to jump in, if I like the numbers. Now, as I was saying, this week you're not going to get your 1% because we got 3 days left. Okay, the maximum amount of money you're going to make doing a covered call is for 5 days. Well, we didn't have Monday. So now we got 4 days. How can we get 1% with only 4 days left? We just lost 20% of our time value. Well, Monday, Tuesday, today, done and over with. Now we just lost 40% of our time value. Well, it doesn't make sense to do it now for this week because you just lost 40% of your time value. Well, fine. Let's take a look at next week. Sherman, I think you have a time machine and you know ahead of... No, dude, I don't. I just take a look at the chart. This is a chart. Anyone has access to it. You take a look at it. Where's the high? It's right there. Where's the low? It's right there. It's not. Adults have a tendency to make this more complicated than it needs to be. Now, for those of you that were here about 15 minutes ago, the video I showed you was my 9-year-old daughter. 9 years old. Okay, she says to me, Daddy, how do you trade? I want to learn. She jumped on my lap and said, Daddy, what are you doing? Can you teach me? Well, great. Well, here she is, right here. The oldest.
Hi, I'm Jason, and as you being part of my internet website called Thingy, which my dad does let me call it that, but I do. Being part of that, you're going to be getting weekly lists
It's my favorite part. It's my favorite part right here. Hold on, it's coming.
What does that mean? That means every single day you can buy a different stock. Still right there is a different company paying out dividends.
That's my favorite part. So,
I think you just
the only reason I bring this up,
January, February, March, that's 12.
the only reason I bring that up is to show you the trading strategy I am sharing with you for free is created for a 9-year-old. It had to be simple. It had to be safe. It had to be predictable. It had to be consistent and no way that she could lose. Because we all know if a 9-year-old little girl loses her money, she's going to cry. Daddy's going to feel like crap. Mama's going to get involved and daddy is sleeping on the couch. May you and her stay healthy. Thank you very much. Can you explain how covered calls in your portfolio affect the overall balance? Do they negatively affect the balance at the beginning of the week or the overall balance gets larger towards the end? Wow, that's an interesting question. Definitely interesting. When the calls lose value. Well, the calls is, all right. Now, this is interesting because nobody asked this question in this manner. Let me see if I can explain it to you the way he asked it. How does a covered call affect the bottom dollar of your account as the week progresses? How much money you make in the last 5 years? I make over 1% per week. So think of it that way. 1% per week, which is over 50% per year. So I make 50% or more every single year on my money. So hypothetically speaking, if I have $100,000, that's $50,000 a year per account. Now I have seven accounts, okay? So yeah, it takes me a little while to do all mine. The reason I have 7 accounts is I don't trust the government, so if they shut down one, I have the other ones to fall back on. Let me get back to the question at hand. What happens to the option price as it loses value? Well, there's 2 different ways of looking at it. Number 1, are you an option buyer or are you an option seller? Because it's a whole different ball game depending on which side of the fence you're on. With trading or investing, I'm a trader, dude. Okay, I invest in long-term stocks. Companies you probably heard of. Companies that I would buy and hold for the rest of my life. So IBM, AT&T, Lowe's, Home Depot, Wells Fargo, Bank of America, Colgate-Palmolive, Procter & Gamble. Companies that are over 100 years old. Okay? The backbone of the American economy. Blue chip stocks, if you will. Companies that have consistently increased their profits to their shareholders. Let's stay on track. How does the option price affect the bottom line as the week progresses? Well, I buy my stocks on Monday. I sell my options immediately. So if I buy a stock at 9:30 a.m., I want to buy at the market open regardless of what it is, because I get to the point where I really don't care what the fill price is. The reason why I say that is once you make up your mind that you want cash flow and 1% a week is just fine, set it, forget it, take the 1%, move on. If the stock jumps up, good for whoever bought it. Do I really care? No, I really don't. If the stock jumps up and goes up 10, 20, 30 points, I really don't care. It's not what I'm looking for. I'm looking for consistency in profitability. Does that make sense? Consistency in profitability. I'm only an investor. I buy and forget. I never trade. Sherman, you're in the wrong place then, dude. Seriously. I'm looking for a 50% return every single year, 1% every single week. Please explain to me how you can invest and collect 50% or more every single year and use those funds to be able to live comfortably. Okay? I'm in a different position than you are. I'm not in an accumulation point anymore. I'm in a cash flow point in my life. I'm assuming you're not retired yet. If you're not retired yet, you should be building your nest egg. Once you retire, your nest egg has got to give you little baby chickens, little egg, whatever you want to call it. A consistent amount of money every single week, every single month, every single year, every single quarter, however you manage your funds. I manage mine weekly, every single week. Okay? I grew up in the 60s, 70s, and 80s. I went to work 9 o'clock at Monday morning, well, 8 o'clock Monday morning. Friday afternoon, I got paid. Same thing here. The market opens at 9:30. Okay? I'm on at 9, and I'm usually done by 10 because I'm teaching people how to do it. So let's get back to where we were. The option. Are you buying or are you selling? If you're buying, you are in the minority. What do I mean by that? The minority, basically, 80%, 80% of all options expire worthless. So ask yourself a question. If 80% of options all expire worthless, why the hell would I want to buy an option? Think about it. Why would you buy an option if 80% of all options expire worthless? Me, I prefer to be an option seller. Got another question over here. It seems my balance should be larger today than selling multiple options, but it seems to be the same. Well, here's the thing. Your account is kind of like putting it into a freeze because you can't do anything with your account until those options expire on Saturday. Now, most people say they expire on Friday. They don't. They expire on Saturday. However, after 3:59 p.m. on Friday afternoon, you can't do anything. So basically, you can't do anything. If you don't trade, why are you here? James, that's an awesome question. Awesome question. If you don't trade, why are you here? Seriously. All right. I invest in Indian market. I invest in the companies who multiply my money. Okay. My assumption is he's at a different level. He has a different vision. My vision is weekly cash flow. So options, when you sell an option, it's going to be a certain price. And as the days go by, the time value slowly ticks away. But it has nothing to do with the stock price because the stock price can go higher. Do you ever sell? Yeah, I sell all the time. Okay, I buy a stock, I sell an option. Just go with the flow. Okay, all questions will be answered as the time progresses. So again, if you're into the buying and selling of options, I don't buy options because options expire worthless. They all do. At some point in time, they all expire. So if I buy a stock and I sell an option, I want that option to go to zero because eventually I have to buy it back. Okay, so if I sell it for $1 on Monday, on Friday or Saturday, I have to buy it back for something. Whether it's 50 cents, whether it's 25 cents, whether it's 10 cents, whether it's $1, whether it's a penny, whether it's zero. Anytime you open a trade, you have to close the trade. So to complete an order on the stock market, you have to open an order and you have to sell an order. So if you're buying a stock, you're buying to open. And when you sell it, you're selling to close. But with the stock market, you can sell to open and then buy to close. But either way, whether you opening or closing, it has to equal out eventually. So anytime you buy a stock, to close your position, you have to sell at some point in time, or it just stays open. And you can't do that with options because options always expire. So let's keep looking at stocks and not worry about the minor details because it's a minor detail. You sell an option, you collect that premium, and it slowly fades into nothing, or it could go higher. Now we buy on a Monday, on a Friday, I evaluate my situation. Okay? Do I let it expire? Do I let it called away? Do I buy it? Do I sell it? Do I roll it into next week? All those questions get answered as we progress. So if I'm buying Nike at 73, well, I only have 3 days left for this option. There's not enough time value there. So I need to look at next week's option. So let's take a look. What does next week's option look like? Well, the 74 for next week is going for 40 cents to 90 cents. But I'm only looking for 74 because 74 cents is 1% of $74. 73. Okay? So I want 1% every single week. Okay, so let's keep on going. That's the reason why I didn't do Nike. The numbers just didn't look right. Andrea, thank you for that. Terry. Wait, you got glasses. Yeah, because I got a new monitor. Okay, without the new monitor, I don't need my glasses. But the new monitor is way over there. Okay, but it's a big, huge screen, so I can read it. But the glasses, I can. Yeah, all right, thank you. Thank you for pointing that out. No, yeah, I know. Okay, Terry wants to look at Procter & Gamble. Procter & Gamble is another dividend king. 100-year-old company, consistently increasing the dividend. I invest in tips, music. Now okay. Sherman, thank you. I don't look so bad with my glasses. Thank you. I basically use them for driving and watching TV. And the new screen is so far away that I need, yeah. All right, anyway. Procter & Gamble, let's take a look. Here's our high, here's our low. Here's where it was, here's where it is. Look at the movement. Up, down, up, down, up, down. Now she's turning around, going back up again. Okay, well, that makes sense to me. Bring it closer. Yeah, I probably could, but, I have to work with the room that I'm in, okay? All right, so a year ago, wait. Before we even do that, what are the numbers we're looking at? 163.81. So the closest strike price we're going to be looking at will probably be the 164s. Doesn't have a 164. We're looking at the 165. So the 165 is going from 130 to 148. Might be better to do the 162.50. Let's just do a little bit of math. 162.50 and picking up 209. All right. 163.80. I'm losing $1.30. Yeah, no, the numbers just don't work. Sorry. Do your fancy math, however you want to figure out. If I buy it at 163.81, I sell it at 165. Well, it's got to hit 165, which means it's got to move up. Can it move up? Yeah. Is it going to? Don't know. Catch. I want to get into options. What's the best way to learn? I always see trader and investors very closely, so I'm here. Knowledge where I'm there. Okay. Options, dude. Just sit, chill, relax, grab some popcorn. I'm here all night. Well, I'm here until about 11:30. Ask whatever questions you need. Options really aren't that difficult once you understand them. It is going to be a new language, a couple of new terminology, but it's not that difficult. You're buying an object. Let's say you have a car sitting on the side of the yard. Push it out to the front of the front yard, put a for sale sign on it. Let's say you want $1,000 for it. Tom down the street comes by and say, hey, I like your car. Let me give you $100. Hold it for me until Friday. Same thing with an option. Sherman, many of us were born at night, but it wasn't last night. Thank you for that. It's a good strategy. All right. It's simple. It's safe. It's predictable. It's consistent. And it makes me 1% every single week. Angel 1. James, I made over 1% with Procter & Gamble. Should I sell now or wait until Friday to sell? Okay, Angel, it'd be easier for me to actually see what it is you're doing, because this here, where you post a question and I got to remember the conversation. Remember, I got 7 cameras, which means I got Facebook, Instagram, 2 TikTok channels, and a podcast. I got 7 channels going at the moment, which means I have a lot of questions. So remembering each and every single conversation is not that easy. Okay, if you really, really, really want to talk to me, really want my opinion or my advice, send me a phone. This is to everybody. Send me your phone number. I will personally call. You can put in the chat right now, does James actually call? If you get a text, if you get an email, if you get anything saying that it's me, no. I always tell people, you want to talk to me, send me your number. I will call you. I'm so old school. I write shit down and I use the phone. Where do I send it? You send it to my email address. You send it to my email address or to my TikTok account or to my Gmail email. See, you guys don't understand. I've been online since there's been dial-up, 256K modem, dial-up, that weird-ass noise. Yeah, I've been doing that, okay? I still have the same email address from the 1990s. So I have 12 email addresses. I have 4 or 5 different websites. I have about 10 or 15 social media sites. Where is that posted? Okay, you're on YouTube right now. In the bio on YouTube, you can send me a message to my phone. Believe it or not, my phone number is on my YouTube account. Okay. But it's easy if you send it on TikTok. Because TikTok, I read that thing 4 or 5 times a day. Okay, YouTube, I don't really get to that all the time. All right, so anyway, as I was saying, where are we? Procter & Gamble, great. Here's the high, it's bouncing up. Let's take a look at the numbers next week. Yeah, okay, great. Do you like Procter & Gamble? Number one question you should always ask yourself. Number one question, does it make sense? If I'm buying Procter & Gamble tomorrow morning at the current price, it is $163.81. If I sell somebody the rights to buy it from me for the exact same price I just paid, I'm collecting anywhere between $1.30 and $2 per share. Make sure the numbers work. Have you read The Intelligent Trade? No. Sorry, Tyler, I'm at that point in my life. Okay, you may not realize this yet because you're probably younger. I'm just making the assumption. Okay. If it ain't broke, don't fix it. Okay, that's a mantra of us Gen Xers. Also, if it works, leave it alone. So here's the thing. If I am consistently making 1% every single week for the past 15 years, and you want to get me to read another book, and you want me to read another book for another trading strategy, well, what good is that going to do? Is that going to get me better than what I'm at the moment? Well, I seriously doubt it because I'm satisfied with 1%. What's your turning point? The turning point in my life? A turning point in my life was they call an NDE, near-death experience. When you have one of those, you change your whole outlook on life completely. Because you think you're going this direction here, and all of a sudden you have a near-death experience, your whole life changes. You realize what's important, what's not important. Okay? Also, another turning point in my life. I was getting ready to buy a motorhome. My girlfriend at the time, me and her, were thinking about buying a motorhome and traveling around the country. She was going to retire. I was already retired. So, here's the thing. I get a phone call from my son. He says, Dad, I hope you're sitting down. I said, what? You're going to be a grandfather. And I'm thinking to myself, who the hell in their right mind would make me a grandfather? Well, apparently my son and my daughter-in-law did. So, I had a plan. I was heading this direction. The phone call, you're going to be a granddad. All of a sudden, everything changed. So yeah, life changes in an instant. Sherman, you expect to believe that you 50x your money, investing in tips, music, whatever you have. Okay, all right. I'm not even going to bother with that one. Okay, I'm old school and I don't apologize for that. I write stuff down. I use the phone. I don't use all this modern stuff. I got a bridge for sale. Cool beans. I can use a bridge. What the hell am I going to do with the bridge? Seriously? One thing I hate about glasses. How much do you need to start trading? Okay, my grandson started out with $50. Okay, you can start with whatever you're comfortable with. Okay, we're getting off track. Let's get back to where we are. So here's the thing. Do I like Procter & Gamble? Yes, I do. They've been in business for over 100 years. Can you gauge the fluctuation and percentage of your strategy? I'm sure I can potentially make more than 50%. A year, correct? Yeah, absolutely, you could. But here's the trade-off. Now, you think you can make more than 50% a year. You probably can. Okay? But you're trading your time for money. Okay? 10 minutes a day, I get 1% a week. See, what you're not understanding is I am perfectly okay with 1% a week because that takes care of all of my bills. Okay? So that being said, if I sat in front of my computer all day long, I could make a shit ton of money. But that's not my main objective. My main objective at this point in my life is to enjoy my life. If I want to sit down, as a matter of fact, one of my most favorite days that I remember, I was sitting down, drinking a Mike's Hard Lemonade, watching a chipmunk climb up a tree, grab a walnut, go down the tree. Come up a tree, grab a walnut. And I sat there for 3 hours watching this chipmunk just go collecting nuts. Okay? So, let's keep on moving. I got a lot of questions. Holy cow, I got 100 questions to answer. So, we're going to be done with the questions over here on YouTube because you guys aren't coming up with anything interesting. Procter & Gamble. Okay, so Terry, Procter & Gamble, here's the numbers the last 30 days. Take a look what's happening in the last 30 days. Okay, here's our high here. Our bottom was a week ago. Now she's going to the upside. Awesome opportunity to jump in if you like Procter & Gamble. Remember I told you the 5 criteria? It had to be simple, safe, predictable, consistent, no way for her to lose. Talking about my 9-year-old daughter. This trading strategy was created for her. 5 rules. Number 1, never buy something you don't understand. If you don't understand it, don't buy it. That means you should understand. Are they profitable? Do they have options? How often have they increased their dividends? What is the high of the year? What is the low of the year normally? What is the fluctuation? What is their movement normally? If you don't understand it, don't buy it. Number 2, never sell at a loss. Number 3, make sure the company is consistently profitable. I don't understand why people put money into companies that aren't consistently profitable. Maybe they'll come back. Well, good for you, not for me. I want consistent profitability. There's 9,834 companies. Why would you pick one that you know is not consistently profitable? It boggles my mind. Rule number 4, weekly options only. I do not want to sit in front of my computer for longer than I have to. When I say the 10-minute trade, it means I should be in and out within 10 minutes. All right, anyway, thank you for that. Makes me feel better. Rule number 5, make sure the numbers work. The numbers, plain and simple. What am I buying it for? What strike price am I selling? What premium am I collecting in? Is that more than 1%? If it's a no, no thank you. Simple, easy, go to the next one. All right, let's keep on going. I got 99 questions to answer. What program or app should I do this with? I have Fidelity. Is that good enough? Okay, Father 7, I honestly don't like, me personally, I don't like Fidelity. I've seen what they have. They don't have what Thinkorswim has. Now, Thinkorswim has everything I'm looking for. My very first thing I want to do, step number 1, always, pick your stocks. If it's in the stock you like, how do you calculate the premium? I don't calculate the premium. The premium is right here. I have no say whatsoever in the premium. How do you calculate your 1%? Well, the stock price, $163. What is 1% of 163? 163. Okay? It is so silly and so simple that it's silly. $163. $163. 1% of $163 is 163. You move the decimal point over 2 places. That's it. $50. 1% of $50 is 50 cents. 1%, you just move the decimal point. That's how you calculate 1% of the stock price. The premiums, you got no choice in those. You want to figure those out? Hey, more power to you. It's called the Black-Scholes pricing methodology of standardized options. Yeah, have fun with that. You see it. The mathematical equation is huge. Looks like something Einstein came up with. So anyway, back to what we're talking about. What am I buying it for? What strike price is the closest that makes sense to me? What a premium am I collecting in? Is that more than 1%? It's a yes, it's a no. Are you okay with getting 0.5% per week? 0.5% a week is 26% per year. Some people might be perfectly happy with 26% per year. James, 2000 year when I started investing. Okay, yeah, I was investing in the 90s, dude. Okay, so 2007, been there, done that, already seen it. I was there during the dot-com crash. I was there during the Y2K crap. Anthony, every hourly worker trades time for money, but who makes money working for others? Learn this and do it yourself. Anthony, awesome. Give a man a fish, he'll eat for a day. Teach a man a fish, he'll eat for a lifetime. Right in the Bible. Give you money, fine. Okay for the day. If I teach you how to make money, you'll be good for the rest of your life. Okay. Can I do this with a brokerage account? Well, this is my brokerage account. Okay. This is Thinkorswim, which is part of Charles Schwab. What program? Okay, we got that one. COVID crash. Yes, I was there for the COVID crash too. Level of manipulations only works for Democrats. Yep, thank you. Gift badge Ford. Oh, Ford. Let's take a look at Ford. All right, here we go. Ford. Simple. High, low. Where was it? Where is it? What's the direction? Up, down, sideways, down, up. Yeah, it's a little bit out of range. Let's take a quick gander. What do I mean by it's out of range? Okay, here's your last 30 days. Yeah, out of range today. Sorry. Thank you, Chicken Biscuit. Okay, Chicken Biscuit, Energy Transfer. Look like Series ExxonMobil sucked today. Did you buy them this week? I bought Siri. We'll take a look at it in a second. But I have another question here. I just think Thinkorswim looks intimidating. That's why I get lost in the premium. Tyler, we'll have to show it to you. VE. Do you do a quarter and a half of a year performance audits? Say you don't make 25% in a half quarter year, do you? Yes, I do. What do I do? All right, so VE, here's the thing. Okay? Now, me and my helper, I just hired someone to help me out. The equation rate, blah, 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 blah. Okay. See, it's very simple, all right? If I buy a stock, we're looking at Ford. Ford's not going to work this week. Take a look. 10.43 to 10.50s, 9 cents to 10 cents. Maybe next week. Yeah, actually, holy shit. Yeah, it will work. Hold the phone. Ford will work. But here's the thing. Look at where it is. Do you really want to own it now? I mean, you will get your 1%. See, the 10.5 is going for 17 cents a share. That's 1.5%. Elliott wave theory, no. Now, Sherman, I love the Elliott wave theory. I love all that stuff. All that complicated indicators, all that complicated stuff. Really, I do. I like it. However, I don't know how to express this enough. If you are over the age of 10, you're going to make it complicated. And the reason being, adults always want to complicate things. It's not that difficult. It was specifically created for a 9-year-old. Okay? It's really, really not that difficult. Okay, here it was, 9-7, up, down, up, down, up. Well, where do you think it's going to go next? Seriously, most likely down. Do I want to jump into it? No. It was created for a 9-year-old. I don't know how many times I got to tell you that. Okay, if a 9-year-old can figure it out, why is it adults want to make it more complicated? Okay, so chicken and biscuits, energy transfer, no. The reason why I'm saying no to energy transfer, well, besides the fact that it's at the high of the year, okay, no. Here's the reason. Look at your premiums. Let's go to here and let's go to there. Okay, look. 0, 0, 0, 0. If you are off on energy transfer and you are holding it longer than you want to and the stock goes down and you try to bring in some cash on it, you can't. 0, 0, 0, 0. No, there's a few stocks that are like this. You mean you just do simple things, champions do not extract. Wait. Yeah, I heard what you said, okay? Well, let me put it this way. If it works, don't fix it. If it ain't broke, don't mess with it. Okay? If it works, why mess with it? It's been working for the past 15 years. And what have we seen in the last 15 years? Well, we've seen a lot of the wars in the Gulf. We've seen the pandemic. We've seen the crash in '08. We've seen another calamity in 2000. We've seen another calamity in 2001. Okay, all this crap that we have seen over the past few decades, yet this is still working for me. If you don't like it, you don't need to do it. Listen more, talk less. Thank you very much. Okay, so energy transfer I don't like. Look, 0, 0, 0, 0, 0. If I'm off, if I'm wrong, and that does happen, okay, I'm getting nothing. Energy transfer, there was another, AGNC. AGNC. Right here. A, G, and C. Now, I used to trade, and why didn't that change? A, G, and C. There we go. Okay? Same thing. I used to trade A, G, and C and energy transfer. I don't trade them anymore because look, if I'm wrong, 0, 0, 0, 0, 0, 0. I get nothing if I'm wrong. Well, let's take a look at Dell. D-E-L-L. Look at these numbers. 57, 54, 15, 11, 16, 11, 7. I'm getting something. Something is better than nothing. How much cash do you need to make $100 per day? I actually don't know. $100 a day would be $500 a week. $500 a week would be $50,000. $50,000, 1% a week is $500. $500, $100 a day, $500. 1%, $50,000 to make $500 a week. All right, so where were we going? Dell. Look, all the numbers. Nice. Intel, INTC. Same thing. I'm making something. Something's better than nothing. What do you do if you don't make 25% in half a year? That makes no sense to me whatsoever. How much money I make has nothing to do about what I do for the rest of the year. Okay? I do 1 week at a time. Thank you, Michael. Talk less, listen more. I don't know what it is about you guys. I want to keep on talking. So energy transfer is going to be a no. Let's keep on going. Hi, Palantir. Seriously? No dividends, no thank you. I don't know what you guys don't understand about that one. Sorry, I'm just looking at the questions. Where do I get started? That's a no. Can you please tell me a good dividend stock I want to invest? Well, okay. Gary, hold that thought. Initial value $1, compounded 5% a day. Okay, yeah. You have fun with that one, Sherman. Okay, so Gary wants to know a good dividend stock. All right, Gary, let's take a look at this. Let's go here. Let's move this out of the way. Let's go right here. Okay. Do you see this right here with Thinkorswim? Okay. 25 years of dividend increases. That means every single year they increase their dividends. Here we go. Ben, that's Ben Franklin. MKC, that's McKesson. Illinois Toolworks. Nucor, O'Realty, APD. What the heck? I have no idea what that one is. Cardinal Health. Yes. I don't even like these companies, most of them. Let me go to my list. I like my list better. Whoops. No. Whoops, yeah. Nope, I want. Oh, here's a good list right here. Here's a good list. You ready, Gary? Mandalese, U.S. Bank, American Express, Bristol Myers Squibb, Verizon, MasterCard, AbbVie, Globe Life, Bank Mellon, Moody's, Procter & Gamble, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Go to Google. In Google, you put in the search, Dividend Kings list 2025. That's companies that have consistently increased their dividends for 5 decades. Okay? Dividend Champions, 150 companies that have increased their dividends for 25 years. Dividend Aristocrats, 67 companies that have increased their dividends for 25 years consistently. And then you have the Dividend Contenders, 300 companies that have increased their dividend payments to their shareholders for 10 years to 24 years. Okay? Gary, that's your dividends. That's your stocks. Oh, that's a no. Yep. Where do I get started? Grayson, come back here every time. Grayson, drop me your phone number here in TikTok. I will personally call you. Joseph Grunder Jr., how are you today? Oops, no, I didn't want to do that. Cancel that. Sorry about that. Okay. Have you read Intel? No. Bought Oracle. Oh, KG, hold on a second. No, KG, you're in the morning group. That's a question you asked me in the morning group, but you want to take a look at Oracle. So let's take it Oracle. Whoops, let's go Here. O-R-C-L. All right, so I'm going to be asking you why, where, and when did you jump into Oracle? Okay, so you bought it at 170. Okay, that was a couple of weeks ago. Okay, you sold the 167.5. Okay, now it jumped. Well, your best bet to do is roll it into next week or the week after. This way you're collecting another premium every single week until that gap gets closer and closer. Because each time you collect a premium on it, the difference between your purchase price and the current price slowly decreases. And eventually you'll be back into a profit in no time at all. But remember rule number 2? Never sell at a loss. Have you read Intelligent Investor? No. It's a good book. Yeah, but why and why? Okay, Nomad, here's a question. If everything I'm doing now is working perfectly, why would I want to clutter my mind with something that's not going to change what I'm doing? One advice you give your loved ones for a good life. Yeah, my children don't listen to me about money. You see, children don't want to do what their parents say, regardless. My father asked me if I wanted to take over the family business. I said no. Well, he said, how come? It makes a lot of money. He says, yeah, but you have no life. You wake up, it's dark. You get home from work, it's dark. You get one day off a week. Yeah, no thank you. Sorry. Here, for me, I work 1 or 2 hours a day. Personally, if it was just myself, it would be 10 or 15 minutes. But I'm helping you guys out because I feel compelled to share. That's the only reason I'm here. I feel compelled to share. So I'm helping a lot of people out with their finances. Great. 1, 2, 3 hours a day, I make more money than I need. So I'm perfectly okay with what I'm doing. And guess what? 1 or 2 hours, fine. I'm outside and I'm enjoying the day. My father, he's still working. He's in his 80s. I have no desire to do that business. Okay, so let's keep on going. BTCW, I have no idea what that means. Blue Sky, yeah, I'm pretty sure Blue Sky is not 20 years or older. Abbott Labs, ooh, Anchor, Abbott Labs, that's a good one. ABT. All right, unfortunately, Abbott Labs, the last 30 days, well, it may have been good, last week. Because look, here's your bottom. Okay, here's your bottom right here. 2 days to the upside. Thursday, Friday, you would have jumped in today. Well, today at the market open, right there. Where did it end up? Well, right there. Okay, is it going to be back down below this by the end of the week? Probably not. So, if you liked it, why didn't you jump in there? Okay, Abbott Labs, 119. 91 to 134. Yeah, you can get your 1% this week. But I personally wouldn't do it this week because look, now it's at a 30-day high. Time to sell, not a time to buy. All right, don't. Okay, Conscious Ofa, Angel One. What's the biggest mistake you see new traders make, and how can they avoid it to build more consistency trading? You can start out with don't buy Hess at its highest. You can start out with not buying anything at the high. Investing in E-Trade Safe? No, it's not. Okay, question. How do I get started, and what resources do I need to get started? Well, Ernest, how are you today? Nice of you to show up. Pleased to meet you. You guys jump on here and you forget about the niceties in life. Hello, how are you? All right, just keep on coming back. Ask questions. Okay, I got a whole bunch of shit for sale, but I'm not trying to sell anyone anything. Okay, we were actually talking about this today. We're going to start on, I believe it's going to be Saturday mornings from 9 to noon, 3-hour classes and they'll be live, so you actually be able to talk to me, ask me questions, and I can actually show you live. Yeah, it's going to be $50 per session. It's going to be 3 hours. Ask whatever questions you want. You'll actually get a booklet for everything you need before you get started. Yeah, I try to telling people I'm not going to sell anything, and here I am trying to sell you something. Sorry, didn't mean that. But I was answering a question. Okay, so we will be start offering classes on set. Best advice, get professional trading help like from James. I have someone teach you how to win. Michael, that's a great one. Find someone who is doing what you want to do. Now, I do 1% a week. Okay, it's not a lot of money, 1%. But at the end of the year, it's 50%. So if you're starting out with 20,000, 50% is 10,000. Is it worth it for you? That's a question. Okay, if you're starting with 100,000, I think trading is depressing, much stress trading. Okay, Sherman, I can't help you out with that one. Just chimed in. Anything make 1% and safe on options or buying in base stock. Okay, alrighty. So find someone who is doing what you want to do. Now, when I say I spend 10 or 15 minutes every day on my personal account and I make 1% a week, okay, that's all I want to do. But that's me. That may not be enough money for some of you people. You may want more. Okay, some of you might be perfectly happy with 1%. And I do know there are a lot of people out there that are perfectly happy getting 1% every single week because it comes to over 50% per year. So we're getting off track. Time is ticking away. We haven't really looked at very much. I'm just answering a lot of questions. It's probably I need to get somebody in here to manage the questions for me so I can come up with the good questions and not have to deal with the bad questions. Thank you. All right, you're welcome. Do you bail out when you hit 1% or do you hold for the momentum, the strong? That's a great question. Do I bail out when I hit my 1%? No. I do covered calls. A covered call basically works something like this. If I like this company, now I usually buy my stocks on a Monday because on a Monday it gives me 5 days of time value. So basically I'm just selling time if you think of it that way. I got 5 days of time value. At 119, the 119 is going from 91 to 34. So if I buy this first thing tomorrow morning at 119.09, I sell somebody the rights to buy it from me any time between when they pay for it and the option expires. Well, the option I'm pointing to right here is going to expire the 24th of January. That's this Friday. I think 10 traders, 9 is losing. No. I had one account last year. I had 0 losses. That means 52 weeks. Okay, I averaged 6 trades a week. So 52 times 6, that's over. That's shit. 52 times. That's over 300 trades without a single loss. Okay, I don't lose very often, but I'm doing a different strategy. So let me finish explaining. All right, if I buy it at 109, I sell somebody the rights. Okay, I sell somebody the right to buy it from me for the exact same price I just paid for it. I know, thank you, it's a 312. For the exact same price I just paid for it, 119. It kind of doesn't make sense to a lot of people. My son can't grasp it. He says, wait a minute, you're buying it for 119, you're selling it for 119, and you're making 1%. How the hell does that work? I'm selling somebody the rights. Okay? It's just an option. It's kind of like an insurance policy. And you all can understand this, I'm pretty sure. Okay, we all most likely have car insurance or homeowners insurance. You have to pay for that every single month. Well, here, I'm doing it every single week. It's an insurance. A stock option is an insurance policy. That's what they were originally created for. If you had a big stock portfolio and you didn't want to lose, you would buy an option, either a call option or a put option, in case the stock dropped. If the stock dropped, your option price would increase. That way you wouldn't lose any money. However, some people came up with said, hey, well, if I do this contract and this contract, don't they offset each other and I can make money? Yeah. Well, here's the thing. If I buy it at 119, I sell it at 119, I collect the insurance premium. And here it is between 91 cents and $1.34. What am I looking for? I'm looking for $1.19. Why do you never sell one strike out of the money? James, it always comes down to safety. So, hold on a second. Sweet Jones, you are middleman, the option, okay? Are you trade margin? Yes. Okay. All right. The question was, why don't I trade one strike out of the money? How do you say trade at night? Okay, yeah. Yeah, they actually have a trigger trade. Think or Swim is the only trading platform that I know that has a trigger trade, and that's the question he was asking. Let's get back to the question at hand, okay? If I'm buying it at 119, I'm selling it at 119. Well, why don't I sell the 118s? Well, 118s is a little bit more. The 117s are even more because you got to do your math. If I buy it at 119, sell it at 117, I'm losing $2. Well, what am I collecting? I'm collecting 175 to 241. Well, I would only be collecting 41 cents because I'm losing 2 right there. So 117 doesn't work. The 118, well, I'm getting 107 to 150. Well, 118, if I buy it at 119, I'm losing $1. So here, I'm collecting 7 cents to 50 cents. No, that doesn't work either. The 119 does work, though. If you only have $1,000, you can do trade, investment, business, or job. Okay. All right. Now we're starting to get out of hand. All right. Let's stick to the trading strategy. You have questions. You really want my attention. Send me your phone number. I will give you a call. All right. So always, always, always do the math. If I'm buying it at 119 and I sell the 119s, okay, I'm getting 91 to 134. Okay, 119 is in this. I'm making 1% if I do the 119s, not the 118s, not the 117s. The 120s, I'm getting 72 to 81. That's not 1%. And then the stock has to move up. The 119, the stock doesn't have to do anything because it's already at 119.09. Okay? I don't know if that makes sense. So let's keep on going. I got a lot more questions to go. 1, 2, 3, Honey Baby. Can you review candlesticks, please? For us newbies. She's a newbie and a half. Asking about candlesticks. Okay, newbie and a half. Are you ready for this? I'm going to try and make this quick. 5 things you want to see on a candlestick. Okay? Each one of these represents a day. Okay? The top of the candle is the high of the day. The bottom of the wick, pick one. Okay. The candle you're looking at has a wick at both ends. Top of the wick, high of the day. Bottom of the wick, low of the day. The candle itself, it has a top and it has a bottom. A green candle is an up day. The opening price of the day on a green day is the bottom. That's the beginning of the day. The close of the day is right there. Green means it's going up. Okay? Red means it's going down. So the top of the wick, the high of the day. The low of the wick, the low of the day. The top of the candle is the opening of the day. The bottom of the candle is the low close of the day. So remember I said there's 5 numbers? The high, the low, the open, the close. Right there, R is the range of the day. How much has the stock moved? So if I take my little cursor, put it on that candle, it will tell me the stock moved $2.05. This day, the stock moved 95 cents. The difference between the high and the low, it's only 95 cents. Okay? Today, the range was $2.77. Well, why is that number important? Well, that number is important, gives you an idea of what's the range on a daily basis. That way you can do some fancy math to figure out, well, normally the stock does this. Normally the stock does that. That's what all these numbers are for. So the candles, high, low, open, close, and range. Okay, 5 numbers. Okay, so let's go back to another one. Whoops, more questions. Ian, well, I knew Nike was the bottom last week, and I slammed it on Thursday, and you wrote it down. Yeah, I did. I did write it down, but I didn't jump into it because I was waiting for an up day. Anthony, I made money on in the money call on Ford using some of your strategy. Cool. Way to go. Bo, an insight on increase in fees. Okay, any insight on increase in fees? Okay, Bo, I honestly don't know. 10% days coming soon. Okay. Gorilla Fatior. Okay, can you tell me if I'm right? I got $17.60 to hold on SoFi. I couldn't tell you. I don't look at SoFi. It's not one of those companies I trade because the numbers just don't work for me. Mr. Dunkin' Donut. Bo, 2025 commissions Fidelity were $5 per trade. Yeah, well, if you're trading with Fidelity, some brokerages have commissions, some don't. You usually have to pay the exchange fees, which is kind of low. What's the best way to learn options? Just Mr. Dunkin' Donuts, hang out, chill, absorb what you can, ask questions. That's the best way to do it. It's not going to cost you anything. Okay, have I read The Intelligent? Okay, is the book worth it? Okay, I haven't read that book. Okay, I'm a firm believer in if it works, don't mess with it. So this works for me, so I have no desire to look at anything else. I get constantly bombarded. Here's a great book. Here's a great article. Here's a great this. Here's a great that. Yeah, no thank you. I have something that works. Leave it alone. Plain, simple. Neil, are you getting some light snow in Tampa? I don't know. I haven't been outside. Ryan, best way to decide when a stock is at its 30-day low. When do you decide? Oh, well, that's pretty simple. Okay, so for instance, let's take, oh, I'm looking at the wrong damn stock. I'm looking at the one down here. Oh, let me go back to here. Hold on a second. Oh, yeah, I have no questions there. Freaking lovely. What do you think of the price XRP? All right, dude, I don't do, if it's not a dividend stock, don't bother asking. XRP doesn't fit. So no snow in Tampa. Sorry. All right, let's keep on moving. Don't. All right, let's keep on keeping on. Here we go. Susop 69. Not sure if you covered it yet, but a mentor told me about the wheel method. Any tips? Oh, okay. I love the wheel strategy. I do. It's great. However, it's not for a 9-year-old. Okay? Now, if you're having difficulty absorbing this information, the wheel strategy is going to be even more complicated. Okay, dividend capturing is the simplest, safest, most predictable trading strategy there is. Okay, when I say predictable, simple, safe, predictable, I know exactly what I'm going to get before I even enter the trade. If you buy a stock, you have no idea what's going to happen. At least with a covered call, I have some control. That's kind of like going to Vegas and playing blackjack. Well, blackjack is one of the only gambling things you actually have control over what's happening. Okay, so yeah, the wheel strategy is great, but it's a little bit more complicated than this. I always tell people, learn simple, safe, predictable, consistent strategy first. Collect your 50% every single year, then bring on other strategies to add to it. Because yeah, the wheel strategy has another component to it that I don't teach here. I do teach it elsewhere, but I don't teach it here. Just pick up the right Greeks. Okay, I'm going to disagree with you. Okay, just going to disagree with you because the Greeks are not as easy as you think. And explaining the Greeks to a 9-year-old, no. When I say simple, safe, predictable, consistent, the Greeks got nothing to do with it whatsoever. It makes things complicated. Please show MACD. Nope, ain't going to happen. Okay, so Angel, when I say simple, MACD is not simple. Okay, when I'm telling you, I gave it to my 9, what is it that you guys don't understand? A 9-year-old, now she wasn't a Mensa student, she wasn't a straight A math honor student, she was a simple, average, everyday girl. Okay, it was 5 simple rules. Number 1, never buy something that you don't understand. Well, for her, it was never buy something not on the list. So let's take a look at the list. Okay? Never buy something that's not on the list. Uh-oh. Got it, no worries, you think? Yep. Okay? Rule number 1, for my daughter, never buy something that's not on the list. Number 2, never sell at a loss. Number 3, make sure the company's consistently profitable. Well, because it doesn't matter, because it wouldn't be on the list if it wasn't profitable. Number 4, make sure it has weekly options. Well, again, it wouldn't be on the list if it didn't have weekly options. And number 5, make sure the numbers work. What am I buying it for? What's the closest strike price? What am I collecting as a premium? Is that 1%? Great. Let's look at the chart. What is the chart telling me? Okay, the chart is telling me the high of the day, the high of the 30-day period is today. That's a no. Okay, simple. That's a no. If it's not at the right time to buy, don't buy it. There's 9,843 different 34 companies to choose from. Why buy something where everything's not right? QCOM, Leo. Okay, QCOM is on the list, Leo. So let's take a look at QCOM. QCOM. Ooh, first look. Hold on. Sherman, be fearful when others are greedy. Be greedy when others are fearful. Yeah, I got that. Good evening. What percentage of your portfolio do you usually allocate for one stock? 20%. Okay, if I'm doing per account, 20%. 5 positions, 20%, 20%, 20%, 20%, 20%. Okay? 98% of all my money is invested at all times. Is it crazy? For some people it is. For me, it makes perfect sense. Why would I leave money sitting doing absolutely nothing? Especially when I get a cash flow from it every single week. Okay? I might not get 1% every single week, but I do get something every single week. Okay, let's jump back here for a second. Just for a couple of seconds. Now, here's my account. Like I told you guys, let's go all the way down the bottom. Just give you a rough idea of what I collected last year. Herman, you're welcome. Okay, last year. Here you go. Week 30. Okay, week 30. 2.8% in this account. 1.4 in this account. 4.3 in this account. That was for week number 30. What do we have here? Oh. MPW, Siri, General Electric, Nextera Energy, Walgreens, CVS, MPW. This account here. AEO, Bitto, Kohl's, Walgreens, Wynn, Macy's. This account here. MPW, Siri, General Electric, Nextera Energy, Walgreens, CVS, MPW. Okay, great. Slide down a little bit further. Week number 21. 4.7% here, 1.07% there. Week number 14, 4.55%, 1.43%. Take a look at my history. It's all there. Every single week I make something. Let's get out of there. All right. Next question. QCOM. We're looking at QCOM. All right. First and foremost, here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Just take your little finger like this. Up, down, sideways. Simple. That's the 1-year chart. Don't make it more complicated than it needs to be. The 1-year chart, fine. Not bad. What am I making? 167.97. 167.50, 183 to 205. That's a definite yes. The numbers are working. Great. Now we know the numbers are working. What's the chart telling me? Well, the chart's telling me here's the high right here. That's 230, and that was back in June. The bottom was back in the beginning of February of last year. Well, look at the last 90 days. Now, why do I go from 1 year to the 90 days? Why? Well, because it's easier to relate to. 1 year gives you an idea. Well, this is what happened the last 52 weeks. Okay, I'm trading every single week. The last 52 weeks, this is what it's done. So this is the last 90 days, the last 3 months. High, low, where was it? Where is it? What direction is it going? Up, down, up. Well, that's easy to see. But that's the 90-day chart. Well, does that really give me an idea of what's happening next week? Not really. I want the 30-day chart for that. 30 days. Okay, here's the 30-day chart for Qualcomm. The 30-day chart, 30-day bottom was 30 days ago. So what usually happens on a 30-day bottom? Well, you have people buying because it's low. They buy and then the stock goes up. Well, look, from 150 to 168. That's an $18 increase. That's 13% increase from 30 days? Yeah, it's going to be profit-taking, dude. This sucker's going to come down. But that's just my opinion. You've got to figure it out for yourself. Now I'm going to share with you something you probably haven't seen before. Hold that thought. Seasonality. Now, you might be asking, what is seasonality? Well, here you go. You ready? Winter, spring, summer, fall. Those are the seasons. Okay? First quarter, second quarter, third quarter, fourth quarter. Okay? Winter, spring, summer, fall. Not that difficult. How does the stock react during those times of year? Well, here's January right here. This thing shoots up in January. Well, what happens in February and March? It drops like a rock, doesn't it? What happens in April and May? It just goes sideways. And then the end of May, beginning of June, she shoots back up again. And then in August, she starts to drop. And look what happens in November, okay? Shoots on up again. And then the end of December just goes sideways. That's the seasonality over the last 10 years. Now, you can set this whatever you want. I have it set for 10 years. It's cyclical. Well, yeah, basically that's what we're looking for. Repeating patterns. And it's exactly what seasonality is. The blue line up here, that represents the movement this year. The red line, that's 10 years average movement. So what usually happens within the first couple of weeks of the year? Okay, so here's where we are right now. That's today. Okay, that's today right here. Okay, beginning in January, she goes up nicely. She goes sideways all the way up until the middle of February. Okay, do you like Qualcomm? Great. Let's get out of this. Go back to the regular chart. Now, it's pretty plain to see. If you can't see it, I can't help you out. 30 days ago, it was at the bottom. Now it's at a 30-day high. In my humble opinion, it's not a time to jump in. It's either time to either get out or roll forward, depending on where you got in, what you sold. Okay, that's one of those questions. Can you tell me if I'm right? If I got, okay, say Gorillian Fatior. Okay, I can't really tell you because I don't do SoFi. SoFi is not one of those companies I do because they don't have dividends. What's your YouTube channel? The 10-Minute Trader. Actually, 1, 2, 3 Honeybee Me. If you go right up here to the, what do you call it? Right there, see that up there? Dividend Stock Talk. Yeah, you click on that. That will bring you to my bio, which gives you all the information how to get a hold of me. Still has room to rise, EX Dividend. Yeah, okay. I'm not quite sure why you're saying QCOM has more room to rise. Anything can go higher. But when's the last time you heard somebody say, hey, look at QCOM's at a 30-day high. Let's buy it and wait for it to go higher. I don't play that game. And I told you that many times. How many companies I need to check into daily? I do 70 to 80. Well, good luck for you, dude. I got like 8. Okay? Amen. Good. Maine, you can see my post, boss man. Yep. Need followers. Okay. I would always get crushed by QCOM. Long plays for me. I don't do long plays. Alrighty. Don't. 104 options. Good evening, James. Hey, 86 is here. 86, dude. You got to help me out with some of these questions, dude. I got way too many here. I need good energy stock. Good energy stock. Is that where we go? Yay, go, wait. Is that good energy? Is that the wrong kind? Energy transfer. I don't do energy transfer because the numbers are absolutely horrible. Thank you, Chicken and Biscuit. CMM. No problem. Huge dividend and looks to be solid. I heard good stuff. Good luck. Really? You like energy transfer? I'm not going to pick on energy transfer anymore. Only because I don't like energy transfer. And the reason why I don't like it, I said earlier. Look at this. Number one, it's at the high of the year. Never, ever heard anybody say, hey, it's at the high of the year. Let's buy it and see if it can go higher. Yeah, no, thank you. But look at here. You got a bunch of zeros down there. What does that mean? If the stock goes down, and don't kid yourself, stocks do two things and only two things. If you're at home waiting for a stock to come over to your house, dump the trash, wash the dishes, empty the dishwasher, take the dog for a walk, you're sadly mistaken. Stocks go up, stocks go down. That's all they do. They don't do anything else. Cisco, SYY. That Cisco has monthly options. That one's a no. CSCO, which is the other Cisco, that one is a yes. SYY Cisco, no. Sorry. Dell, ooh. Out of time 420. PLTR, guidance. Okay, you want my opinion on PLTR? You ready? Here it comes. No. Now, when I say I only like companies with dividends that are consistently increasing, PLTR has no dividends. That is a no. That's a no. But I do like Dell. See, check out Dell. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, up, down. Now she's going back up again. Right here. This is this week. This is what I want to say. So Dell is a possible yes. Possible because I haven't seen the numbers yet. 114.19. The 114 is going from 57 to 82. No for this week. Next week, 114 is going from 165 to 190. It's a yes for next week. Now, no for this week because there's only 3 days. We've already lost 40% of the time value. Now, time value is a huge portion of the stock price. Of the option price. Because you get the stock price and you have the time value. Sherman, price to cash flow, price to sales, price to book, PE, but one more important investment. Yeah, I get that. Seriously, I do. But what's more important to me than all that other stuff? Consistency of profitability. Okay, I don't know about you guys, but if a company is consistently profitable, well, that kind of pushes it up on my list. Okay? And if they're consistently profitable for 20 years, well, then it's even higher on my list. If it's consistently profitable for 50 years, it's a hell yes. Okay? I always look at the chart. High, low, where is it? If it's at the high, I don't care how many years of it consistently profitable it is. I'm not buying at the high of the year. At the bottom, as it's falling, hell no. I buy here. After it finds the bottom, turns around, starts going back up again. Because you can't tell me otherwise. I've been doing it long enough to know for a fact. This is a fact. Argue all you want. Stocks go up, stocks go down. Stocks go up, stocks go down. That's all they do. Sales growth or profit growth. Okay, I'm going to say this again slowly because apparently you're not listening. Consistency of profitability. This room is about options, not fundamentals. Thank you very much. Okay? Now, I think a fundamental, okay, simple, something you should learn right off the bat, 1 + 1 = 2. 2 plus 2 equals 4. If the company is consistently profitable and the profits increase every single year for more than 2 decades, yes, I'm putting it on my list. Okay? Palantir, no consistent profitability that I can see. They don't share their profits. No, thank you. Dell, hell yes. Sherman, you got it? Now, Sherman, I understand everything you're saying. Honestly, really, I do. That's the mentality of someone who buys and holds on to it 5, 10, 15, 20, 30 years. Absolute nothing wrong with that. That's not what I'm doing. I'm not looking to get married again. Okay? Do you promise to love, honor, and obey and hold on to your stock for the rest of your life? Hell no. I'll buy it if it's at the right place, the right time, and Moon is going over retrograde with Pluto coming over the horizon, smiling. No, I don't do things that way. Does it make sense? Here's the high, here's the low. Is it going up? Is it going down? If it's going up and the numbers all work and it's a good, profitable company that has been consistently profitable for more than 2 decades, you got to remember, most companies don't make it past 3 to 5 years. Okay, 1 in 1,000 will get to 10 years. So I'm looking at companies that are 20 years or more. Okay, 20 years or more, and they're consistently profitable. That's my only concern. Okay, so let's get back to Dell. See, everything looks pretty good here. The numbers look pretty good too. So let's take a closer look. A year ago was the bottom of the year, and that was $80.92. From there, she shoots up to $179. Now, do the math here for a second. Look at this. From here to here, it's over 100%. Here to here, it decreased 50%. Shoots back up from 90 to 150. That's a 60% increase. And then back down here, another 25% decrease, and now we're here. Okay, fine. Well, let's take a look. There's the high, the last 90 days. Same thing. High, low, where was it, where is it? Where's the direction? Up, down, up. Okay? It's not that difficult. Adults have a tendency to make it more complicated than it needs to be. It was created for a 9-year-old. If you can't understand it, I can't help you out. Okay? It's not that difficult. Where's the high? Right there. Where's the low? Right there. Ryan. If you buy a covered call, stock drops, you accidentally sell the stock, but you didn't buy back the option. What options do you have? Just practicing on simulation. Okay, number one, that is called selling a naked option, which you got to be qualified to do that, which means you have to have years of experience, number one, because they want to see how long have you been investing, how much education do you know, how good are you at it. That's one of those silly questions. Okay. Number two, you really can't do that because that will put you susceptible of a huge loss. Okay. Okay. Sherry, not pre-recorded. Thank you. That somebody asks that question every time. Sherry, how are you today? Ford barely moves. That is correct. Ford barely moves. CEG. William wants to look at CEG. CEG. Hell no. That was quick, wasn't it? The high of the year. Okay. I don't like buying the high of the year. I will wait, I say, about 3 weeks before this thing comes back down to this area down here where it makes more sense. Do you think Royal Bank is good for dividends? I'm learning and watch you every day. Can I say, Rob, I honestly couldn't tell you. I have no idea who Royal Bank is. You actually have to give me the ticker symbol and I'll be able to look it up. But if I've never heard of it, usually it's not good for this particular strategy. If you like the company, fine. That is it. See, I never tell people what to buy, what not to buy. That's a choice you got to make on your own. I can't help you out with that one. I can give you my opinion. You give me the ticker symbol and I can go through the motions and give you my opinion. That's about all I can do. Okay. Can you explain the zeros on the premium? Yeah. That means you can get nothing. That's what a zero means. Okay, Mike Tuxton, that guy is the troll. Okay, James, if you want to be a moderator over there, I'll give you the power. And that way you get a troll, you can just get rid of them. I don't like those. Okay, where are we? I can't see the screen where you're pointing at with the premiums. Oh, okay. All right, my dear, here are the premiums right here. Okay, here's some more premiums down here. Now, the ones with the zeros, that was on Energy Transfer and AGNC. If the numbers don't work, it's going to be a no. Now, C.A. Smith, you're a new student. Yeah, you told me that yesterday. Dina Leiden wants to look at Macy's. I love Macy's. I actually bought me some Macy's this morning. Okay? Macy's is almost like a perfect setup. Now, some people might say no to Macy's, but you got to read between the lines. Now, Macy's had 4 buyout opportunities last year. 4. Okay, someone came in and said, hey, I want to buy this company, take it private. Macy's says, hell no, we don't want to sell. So, is what it is. So Macy's high was 22, bottom right here, right around 13.50, somewhere in that area. But it's bouncing off of that right now. That's why I jumped in, because the numbers look right. Let me show you, let me explain, and let's actually walk through a trade using Macy's as an example. That way some of you will understand a little bit better how it works. So let's do this. Last year, Macy's was at 18, jumped up at the high of the year at 22.12. The last 90 days, look at that. High, low, where was it? Where is it? Up, down, up. Simple. Don't make it complicated. Simple. Okay? You can, if you want to. Down, up, down, up, down, up, down. You could do all that, but do the basics. Simple. Up, down, up. Simple. All right. 30 days. The last 30 days, and I'll show you exactly why I bought it. Okay? And if I have to explain to you why I bought it, you weren't listening, because you should be able to take one look at that and say, that's awesome, because it is. Look, 30 days ago, 16, jumps up to 18, drops down to 13 and a half, and then 3 days to the upside. 3 days to the upside. I like 2 days to the upside, which was Friday. See, Thursday, Friday. I jumped in first thing this morning, and she jumped up. Let me show you the trade that I did this morning and see if it makes sense to you. Okay. Let's get out of this. Let's go to covered call. Now, I jumped in at 14. Okay, that was this morning. Now, I'm going to do just one cup. I'm going to do the 1450s because that's where it's at the moment. So if I'm going to buy first thing tomorrow morning, I'm going to show you this. You ready? I'm going to do just one contract so you guys will understand, which means I'm going to buy 100 shares and sell one contract. Listen closely, because it's not that difficult. And then I'm going to change over here to where it says limit order. See this? I'm going to change that to market order, and I'm going to explain to you why. A limit order will sit on the market maker's computer until he or she decides to fill it. That's up to the market maker. It's kind of like a grocery store. Your corner store. Quick Stop, 7-Eleven, Quickie Mart, Shop Mart, Circle K, whatever corner. We all have a corner store, no matter how far down the road it is. It might be right around the corner. It might be down the road. Great, I'm gone. Okay, Michael, have a good day. All right, here's the order. Are you ready? This is what it sounds like. I always encourage people, read it out loud so you can hear what it says. Buy one covered call Macy's 100. That is the weekly. 24 January 25. That means this option expires this coming Friday. The $14.50 call option against the stock, Macy's, at the market order to open first thing tomorrow morning. So first thing tomorrow morning, 9:30 a.m., this order will fill. Now, these numbers here, let me explain them to you. Here we go. The very first line you're looking at, 14.21. That is break even. That means if the stock is 14.21 or higher this coming Friday, I'm going to be in a profit. What profit Don't really know, but a profit. The next one down, maximum profit. Remember when I said simple, safe, predictable? I know what I'm making on this trade even before I do it. Now, granted, it's not that huge, but let me finish going through the example and you will be able to understand. 29 cents per share. Sorry, $29 per contract. Hold on. So the break even, $14.21. The stock at this moment in time is at $14.45. So, as long as the stock, if stock goes up, great. Say the exact same, great. I'm still making money. If it drops, it have to go below $14.21 before I start losing any money. But I only lose if I sell for less than I paid. Remember rule number 2? Never sell at a loss. I have no intention whatsoever selling Macy's at a loss. Okay, let's finish it up. All right. The cost of the trade, $1,400. Well, let me explain. Let's get the calculator because we're going to need that. The calculator. Here we go. Clear that out of the way. Clear that. We don't need that. All right. We're going to take the maximum profit. Means if the stock is above $14.50, right now it's at $14.45. What are the odds or probabilities of it being $14.50 by the end of the day on Friday afternoon? Okay, what are the odds? Probably good because we saw the chart and it's in an upward motion as it's coming off of a 30-day bottom. 30-day top, 30-day bottom, she's going to the upside. Okay, it's simple, it's easy, even 9-year-olds can figure it out. That's why it was created for a 9-year-old. It had to be simple and easy to follow. All right, my maximum profit, $29. To figure out what your rate of return is, you take the profit and you divide it by your investment. In this particular moment, one contract is costing $1,421.66. Okay? Divided by 1421.66. Okay? Profit, $29. Investment, $1,421. What does that come to? 2.03%. See? 2.039%. 2% a week comes to over 100% per year. This is Macy's. So you get a lot of questions you need to ask. Number 1, does it make sense? Number 2, do I like Macy's? Number 3, do I like Macy's at this current price? Number 4, am I willing to hold on to Macy's for as long as I have to consistently get a return every single week and collect dividends every 90 days? Do I like the stock? Am I willing to hold on to it? Those are the questions you need to ask. But the number 1 question, does it make sense? Now, you can't buy the name recognition that Macy's has. Macy's has been working on name recognition for over 100 years. Okay, it's not that easy to come by. So yeah, it makes sense to me, but it gets better. Now that, what I just showed you, is if it is an all cash account. What if you did a margin account? Now, I have a margin account because I've been trading for 20 years. Okay? Just starting out, I always suggest people do not get a margin account until you understand the risks involved. All right. So, this number down here tells me what I'm paying because I have a margin account. And let's see what the rate of return is for that. So, all cash, it would be 2%. Okay, remember I say I average 1% every single week? Do I make 1% every single week? No, but I average over 1% every week. See, last year I did over 1.2% every single week. Okay, one account I did 1.4% every single week on average. Because you take the total that you make at the end of the year and you divide it by 52, and that's your average. 1.2% last year. This year I'm looking for 1%. That's it, just 1%. If I make 1.2, hey, I'm happy, but 1%. All right, anyway, so same thing. Profit, $29 per contract, because the profit never changes. It's the same amount per contract, $29. But on margin, I'm only have to put in $702.65. Okay, so divided by 702.65. And that comes to a grand total of 4.12%. So there's a difference between margin and all cash. There's risk involved with margin. With a cash account, there's not much risk, because when you buy a stock, it is yours until the day you decide to sell it. If you never decide to sell it, especially never sell at a loss, you should be fine. If you do a covered call every single week on Macy's, does it really matter what you buy it for, what you sell it for? No, not really. Because everything can work out one way or another. So let's take a look at the last year. Okay? So this is the chart last year. Now, if you take a look at all my trades from last year, let's go all the way back to week number 1. You're going to find this rather amusing. You ready? Okay, look. Macy's. Okay? Macy's. Okay, week 1, quarter 1. Week 2, Macy's. Week 3, Macy's. Week 4, Macy's. Week 5, Macy's. Week 6, Macy's. Week 7, Macy's. Week 8, Macy's. Week 9, Macy's. Well, needless to say, if I'm getting 1 to 3% every single week on Macy's, yeah, I'm going to hold it all year long and collect 1%, 2% every single week on Macy's. All right, so we're at 11:24. We're done in 6 minutes. No more stocks. Let's just go through the questions. Are you ready? Here we go. Questions only. Macy's, yes. Suncor, SU, no. How many stock positions do you hold at a time? Now, I have 7 different accounts. 7 different accounts. So each account has anywhere between 5 and 7 positions. Okay? Each position is usually around 20%. How do I join the morning group? Honeybee and me. Now, like I tried to say earlier, I try not to sell anything here, but I answer questions. If you really want to, Honeybee, if you really want to join the morning group, you can send me a text, a DM with your number. I'll give you a call, walk you through it, see if you really like it. But for the foremost, right here, that10minutetrader.com, okay? Click on that right there. That will bring you right to where you sign up for the morning trading group. Okay, Laura Evans, Canadian or American? This is American, only because I don't know the rules for the Canadian stock market. Okay, I don't know the rules for the Indian stock market. I don't know the rules for the British stock market. I don't know the rules for any other market other than the American market. Okay, so let's keep on going. PH, Parker Hannafin, that's a good one. URI, we'll have to take a look at tomorrow. Why don't you know the rules? Well, because I live in America. Here's an interesting question for you. Okay, now I'm going to see if you grasp this. A young man once asked Albert Einstein, "Excuse me, sir, how many feet are there in a mile?" Simple question. Albert Einstein said, "My dear boy, why would I bother congesting my mind with useless information that can easily be looked up somewhere?" I'm going to give you the same question. It has no relevance to me whatsoever. So why would I want to know what the rules are on the German stock market, the Japanese stock market, the British stock market, the Canadian stock? Has nothing to do with me. That's a good answer. All right, anyway, let's keep going through the questions because we're almost done time. We only got 110. Got a bunch more questions. I would love that. When do you start? Okay, Becca Makawa. Now, Becca, you've been here long enough. You know how to get a hold of me. If you got a question, DM me, and I'll be more than glad to answer it for you because I love that. When do you start? I'm not quite sure what that means. Can all of us launch meme coins like... Okay. What do you think about yield max? Hell no. Okay, so just browsing TikTok. Seriously, take a look at the numbers. XRP, hell no. Sorry, XRP, not a dividend stock. Don't waste my time. Yield max, same thing. If you do not know the answers to all those simple questions, you shouldn't be investing in yield max. Seriously, you shouldn't. Because if you don't know the answers to the questions, you shouldn't invest in it. That's my answer. That would be great for everyone. Hey, world you want to live in, girl. How are you today? Luke, what do you think of new Republican senator? Never heard of him. Ooh, NSHSY, Hershey. Love Hershey. Did you create the calendar showing the dividend dates? No, that is from Think or Swim. Okay, Steve, I like Hershey. I do. We'll have to take a look at it tomorrow. How do you calculate your percentage? If the government recognized crypto as an asset, would you consider investing into crypto? Yes, I would, if I could collect a safe, predictable, consistent 1% per week without having to sit in front of my computer all day. If they have options, if they have a way for me to safely do it, yes. Until then, no. Stock market's been around for over 400 years. 400, I'm going to say it slower, 400 years. Cryptocurrency has been around for what, 10? Maybe? 15? Yeah. That's like, here's a good one for you. That's like giving the keys to your Lamborghini or your Maserati to an 18-year-old. Hey, you're old enough to drive. Here you go. Yeah, no, sorry. Why did they give you a range as to premium amount? Hello, Jennifer. Well, the option premiums, it's a good question. Got to get the glasses on. Screen's too far away. Okay. So the option premiums, there's what's called a bid and an ask. Same thing with the stock. There's a bid and the ask. Now, when the market is open, the distance between the two gets tighter. After markets, they skew the numbers because it makes it more challenging for people like us using after hours data to do some calculations. But during the market, there's usually a 1 cent to 2 cent difference between the bid and the ask, the buy and the sell. Same thing with the options. Okay, during market hours, the numbers are closer together. Why are they that way? That's an awesome question. Jimmy Warren, how do I calculate my 1%? This is something you should ask your third grade teacher, because $14.45 is the stock price. 1% of $14 is 14 cents. Okay? 1% of $14 is 14 cents. You're just moving the decimal point over 2 places. That's it. I want to learn how and when to start trading. Anthony, how are you doing today? What will happen if Trump gets rid of income taxes and raises tariffs? Wow. That's an economic question for the for an economics person. Here's the thing. The tariffs you're thinking about are from imports coming in from other countries. You want my thought? You're not going to like it. If you're worried about tariffs on products that are imported, stop buying that shit and buy stuff made in America. There you go. It's actually that simple. Okay? If old Trump gets rid of taxes, awesome. I make more money and I don't have to worry about taxes. Am I worried about imports getting tariffed? Hell no. I just buy American. It's that simple. You have patience. Thank you for your time and knowledge. Larry, thank you. Thank you for that, Larry. Seriously. So let's keep on going. Thoughts on Apple? Love Apple. We'll have to take a look at it tomorrow, though. Thank you. I learned more stuff today than I did in college. Yeah, because in college they teach you shit to be an employee. Not to make money, but to be a good employee. Remember that. You go to school, you go to college to become an employee, not an investor, not a business owner, to be an employee. Keep that in mind. Okay, so Mike, okay, Apple, love Apple. Do you use technical analysis when reading charts, and you look at certain patterns? Jake, I don't want to insult your intelligence, Jake, but this was created for a 9-year-old. I can actually guarantee you 100% I can get my 4-year-old grandson and ask him, hey, little buddy, where's the high? And he can go, hey, Papa G, the high is right there. Hey, little buddy, where's the low? Hey, Papa G, the low is right there. Buddy, can you trace it out? Yeah. Up, down, sideways, up, down, up. Stop making it more complicated than it needs to be. You want to do the charts and all that kind of nice, neat, fun stuff? Great. More power to you. There's nothing wrong with it. It's great depending on what you're looking for. I'm looking for simplicity. I'm looking for profitability. I'm looking for consistency. Okay? Simple, safe, predictable, consistent. That's what I'm looking for. Pattern? Yeah, here's the pattern. Up, down, sideways, up, down, up. Okay? Thoughts on Apple? We'll do Apple next tomorrow. Did something happen today with SQ? I have no idea who SQ is. Sorry. Thanks, James, for your fantastic information. Have a great night. Angel, you have a great night. Thank you, Daddy. I love stocks on E-Trade. I have stocks on E-Trade. How do I do a covered call? Now, living consciously. Ooh, Chung likes Home Depot. I love Home Depot. Dividend King, 50 years increase. Happy Thaga. Good to you. ICT traders there are. I have no idea what an ICT trader is. Home Depot, I love Home Depot. I do. 5 decades, 50 years of increased dividends with Home Depot. Great company. Buy it at the right time. Jagan. Okay, how are you doing? Good night. Thank you. You're welcome. All right, I can't tell you how to do anything in E-Trade. I tried it E-Trade years ago. I didn't like it. How about LUV? Ooh, Southwest Airlines. It's on my list. Yep, good. Insiders, got it. Where am I from? I'm from the Boston area. Okay. Let's keep on going. Does Schwab allow anyone to trade options? You actually have to qualify for doing options. Okay, they don't let newbies just jump in and do options. You actually have to read a book called, I think it's called Risk Characteristics of Standardized Options, something like that. You got to read it and understand it. It does have risks. The interesting thing about options, they all expire at some point. Now, a stock, you can buy it and pass it along to your children, your grandchildren, your great-grandchildren. You don't ever have to sell it. But an option, once you buy an option, it is a declining asset. It will eventually go to zero. Should we ever exit a call early? Raphael, only if the numbers make sense. Should you enter and exit a call early? If the numbers make sense, yes. Any possibility you will get my Riley question? Uh-oh. I know it's almost your time, I guess. Riley. Okay, I don't know what your question was. So, would you want to, a world you want to live in, girl? Ask me the question again, because if it's way up here, I didn't see it. But if it's down lower, I will answer it before the night is over. What about NKT? Never heard of it. Tomorrow night, can we do Cisco? Ooh, I like Cisco. It's at the highest now. No. Why would you ask me to take a look at a stock if you know it's at the high? If you know it's at the high, why would you want me to look at it? Holy cow, I need to cut my hair again. For a starter, what is the best platform to trade? Hard Bars Entertainment. Okay. Here's the thing. Okay. My honest opinion, use Thinkorswim. It's an advanced trading platform, but once you learn it, you never ever have to upgrade. I've been using this exact same platform for 20 years, and they haven't changed it in 20 years. Okay? Now, it was originally created by a professional trader. He made it for himself. He sold it to TD Ameritrade, who got bought out by Charles Schwab. So now Charles Schwab owns it. But I'm still trading on the exact same trading platform I traded on 20 years ago. I like it because, yeah, at first it's very confusing, very complicated. But it's not that difficult once you learn. There's a lot of stuff on it. 98% of everything on Thinkorswim is totally irrelevant to me. Nothing to do with me whatsoever. So I don't look at it. And there's a lot of stuff on this trading platform. Honeybee123, I'm only invested in several retirement accounts, learning a lot here the past couple of nights. Thank you. You're welcome. Time to up my game. Yep, I am very excited to talk in options class with Fidelity this week. Okay, all right. TRGP, never heard of it. Fidelity has option classes? Probably. Well, I missed that. Uh-oh. Can we look at... Okay, Brian, Dollar General. We'll take a look at that tomorrow night. Remind me. Sherry, you're well. Yay! Hey, Sherry, hold tight. I'll give you a call a little bit. I'll see how the kids are, the grandkids, all that kind of nice stuff. Raffaello, I believe you must have an account with them. Do all calls get assigned at the end of the week? No. You have also written a book on dividend stocks. Yeah, Mr. Cusum, I think it is. I've written 14 books. Okay, now you'll notice I have not tried to sell anything. If you want to buy one, hey, they're in the bio. You can go to the website. A lot of stuff to buy. Okay, have I done SoFi? I don't like SoFi. Okay, George W. Bush. That's funny. SoFi. When I honestly say, you should always know what you're buying. So if you're asking me my opinion on SoFi, that means to me you have no idea what you're buying. So why the hell are you buying it? Because if you did take a look at all the details on SoFi, it does not fit at all. Okay, no dividends, no thank you. No weekly options, no thank you. No 20 years of consistent profitability, no thank you. It's really not that difficult. It either fits or it doesn't. When you go shopping for a new pair of shoes, a new coat, a new jacket, a new shirt, new anything, well, you try it on. Does it fit? Great. If it doesn't fit, it's a no. It's actually that, and it's so silly for me. I find it strange that I have to explain to perfectly functioning adults. If it don't fit, it's a no. No dividends, no thank you. No options, no thank you. No weeklies, no thank you. No 20 years of consistent profitability, no thank you. Yet, people still ask me about what do I think of SoFi. If you knew anything about what you're asking me, you wouldn't be asking me about SoFi. It's actually that simple. Any thoughts on MPLs? Never heard of them. I'm reading your books. There you go. All-time favorite books for investing. My all-time favorite book for investing would be Wall Street Money Machine by Wade Cook. It's a simple read. It's easy. It's right to the point. Meme coins, no. Thank you for another great night. Yay! Paul, hey, Club Med Tom, how are you doing? What stocks did I trade today? Today, I did Verizon, Siri, Macy's, and Kohl's. Along with other positions I have. You roll up when it's in the money. Okay, Pedro, listen closely because you're going to hear me say this all the time. It's a good question. You roll up when they get in the money. What was the book? Oh, The Wall Street Money Machine by Wade Cook. It's an old book, but the stock market's been around for 400 years. You know what's funny thing is I wrote a book once, and I passed it in to Amazon. And they wrote it back to me and says, you're plagiarizing. I said, how the hell do you think I'm plagiarizing? Well, we've heard all this stuff before. I said, well, yes, you've heard it all before. The topic is 400 years old. It's like when you write stories about the Bible, how many different renditions can you get? Over 400 years. It's going to be the exact same. Anyway. All right, so Pedro, you roll up when it gets in the money. Listen closely, Pedro. It's always, always, always going to be about the numbers. What do I mean? What did you buy the stock for? Did you sell a covered call? What did you get? What's it at now? What are the pros and cons? Wade Cook talked about the covered calls in that book. Yes, he did. He called it the meter drop. Anyway, So you see what I mean? What did you buy it for? When did you buy it? Did you sell a covered call? What covered call did you sell? How much did you collect? Great. Now, you bought it, put it this way. Bought it on a Monday, now it's Friday. Okay, what did I buy it for? What's it at now? Do I roll it forward to get some more premium for next week? Do I let it get expired, let it called away, and have all my cash returned to me for Monday to do it again? Okay, it's always, always, always going to be about the numbers. Okay, double check that. Okay, so you guys have a great night. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I buy dividend stocks to collect a safe, secure, predictable, consistent 1% per week. Now, 1% per week is over 50% per year, and I only use pre-qualified dividend stocks. And those are companies that have consistently increased their dividends for more than 2 decades. James, I want your book. Pedro, I've written 14 books. 14. Now, eventually, hopefully within the next couple of weeks, I'm going to have all the books on my own website and on TikTok, so you guys can buy them from there. Is it in Amazon? Yeah, they're all on Amazon at the moment. So, you guys have a great night, and we will see you again tomorrow night. Same time, same channel. You guys have a great night, and we'll talk to you later. And now the end is near, and so I face the final curtain. My friends, I'll say it clear. Turn off your damn phone. I'll state my case, for which I'm certain